Alright, let's do a end of day review for today. And today is Tuesday, August 15, 2023. And it's the second trading of this week. And tomorrow we will have the, I think, FOMC minutes release at 2 p.m. Eastern time. Let's see, how the market react to that new. Alright, first let's review what setup we are seeing today, right? During the first hour, I saw this, the pre-markets, I saw have a sell-side liquidity imbalance. That means the market likely to go down. And we see that the London low was taken, and also the previous day high were taken. So that's kind of give you some kind of signal that it's gonna go down, right? At first it take the previous day, right? I put here first, right? At first it take the Friday high or the bicycle was taken, and then it starts going down fast. Look at the London, move right here. This is one of the biggest London move I haven't seen for a while. You see, it's about $3, more than $3 move right here. And pay attention at this candle, and this candle can be qualified as a bearish breaker right there because it's a swing low right there. You see that? And pay attention when the price move into that area, boom, it start to go down right there. And that's the setup that we are, saw is developing right there, but we didn't take the trade. So we identify around 10 right here. We identify when it show up right here. We see that's bearish breaker, right? And the buy side liquidity was taken. You see the buy side right here. Okay, this candle take out the equal high right here. You just take out, that's buy side liquidity was taken. And plus you have a sell side liquidity trap, right? You have a sell side trap right here. Buy side liquidity trap. And just before it start going down, you see that the candle is higher than this candle. That means buy side liquidity was taken. So you have buy side taken at a short term and also an intermediate term right there. So you have two confluence right there for a good short right there. However, we didn't recognize in the real time. It takes us almost like 45 minutes later. One of the reasons we late into recognize this setup gives me because we are a little bit busy to look at the long setup right here, right? I show you that we are busy. Right, at first, you know, I saw this when it's, well, I thought, wow, it's sell-side rejection, so it's good to, you know, go long, right? That's the tricky part right there. I saw auto block follow gap right there, and I'm thinking this is a retest, so it's a good to go long, but actually it's a right here. Yeah, it did see this auto block. I thought it's gonna be bow, but actually it's not bow. It's another retracement before I start going down. So I didn't see, you know, the short setup forming, but this right here should give us the idea that the short setup is forming. You see, huge down move and then retracement, right? So right here you can treat this, yeah, can you believe that? You can treat this as the auto block also. You're the bearish breaker here, and also you can see this the auto block right there. Boom, fell gap. Or this can also confluent, you know. But we go with the breaker is, you know, more reliable. But at the same time we have overlap with auto block right there. So it's very, I think it's a very high setup. Yes. So we need to put a note right here. Yeah, also auto block. Cover that. Yep. Beautiful. We have a confluence right there. See the auto right here, auto block, upload candle right there, and you see the feather gap. Here a gap right there. Lots of gap right here. Implied feather gap. Boom. Not a boom. You see, not a gap right there. Boom. And it go back all the way there. Retest that. See that? Wow. Boom, boom, boom. Right here, you have first two candle. 10 minutes for 10 minutes right there. For 5 minutes. Then it's heavy down right there. Well, that's the setup we mix right there. Well, if we're going right here, put a stop loss set above this level right there. Previous day high right there. Right, that's the previous day high. Yeah, the day before that, I think on Monday. Yep. Yeah, that's the setup we make, and look at that. Look at, we put right here and you see how much it moved, how much we reach. Man, a $4 move right there, you see that? And how much we reach right there with all this auto block. Man, beautiful trade right there. And how much we reach? 18 cents. Can you believe that? 18 cents and you get $4. 18. Wow, what a trade. We'll get there. We will get there. So basically we reached 18 cents. got $4.80. Man, what a risk reward ratio. Beautiful. We get in there. We will recognize the setup. You know, right now we recognize after it form, but our goal is we're gonna recognize as it forming in real time, or even better, the next level, that we're gonna recognize before it forming. That's the beauty right there. But just we cannot get it overnight, right? We take practice. Everything take practice. Basically repetition make perfect. Just practice, just revision, and we can impress that into our subconscious, so it become our second nature. We see it, and we see it before forming. And so that means, wow, 20 cents, wow, it's like 1 to 20, right? Right there. Let me double check real quick. She said, I believe so. Yeah, more than 20. I mean, it's just roughly right there. Can you believe that? What a tree. Man, I wonder if any guy can recognize that. Put the trade right here, right? Put your limit order right here. Put stop loss there, and then let it go. Let it run. Man, you see this run is so clean. It's called low resistance liquidity run, and when you get in here, you're in the money all the time. You don't have to worry about. There's no retest. There's no go back there at all at that level. Retest 1, retest 2, and there's 3 times. That's it. What the high of this one level? 67 for the high of this guy. 64, the 3 cents below right there. Man, beautiful. But if you miss the entry day here, then I think you can re-enter right here. You know why? Because we have the fair value gap in this time frame. This is time frame very critical. If you see any fair gap in here, then it gives you an idea that you can short when it go to retest this order block. And this basically this gonna treat you it will treat you at a bearish breaker. Okay, the reason why we put it right here, you remember, because we thought it's gonna be a long setup, but it's now not a long setup. So let's remove that for now. So why that trade is invalid? Because we thought go here, boom, it break it. So it will not be valid. Then it will become it become the resistance level. So when it go back that level, it can give you some idea that, you know, go short. This can be your, right here is the swing low, right? And fair gap, it's a perfect trade for you right there. If you missed entry there here, then right here you have another trade set up right here. So you go in at 12 o'clock, and this breaker is at 9:45. Okay, that is the second setup that we are see it. It's 9:45, and it's so it also what it also fit into the R model. You see the R model right there? Even though that right here we don't have a confirmation yet. We don't have the close below the EDR, IDR low. However, it gives you the pattern right there. You see the setup. When it retests the mid-range of DR and it fall into a breaker with a fair value gap right there, then it gives you a very high quality setup right there between the ICT concept and the DR model right there. That's the beautiful integration right there. So let's get 0945. Right here. So this bearish breaker, which is a swing low right there, and a down close candle. And we are bearish breaker, and you see the fair value gap right there. Boom! It retests that fair value gap, and that's bearish breaker, and start going down. So if we meet the $4.18 trade, then you can get in from here. You can get, let's see, if you go late, you still get good buck right there, good money, good chunk, good portion right there, 294, not bad. And how much you reach, you beat your stop loss right here. And how much you reach for trade. So basically you reach 30 cents, around 30 cents, and you gain right there. Wow, what a trade. What a trade, my friend. Yeah, let's log this trade into our journal. Hold on. I need to put a timestamp right here. So the entry gonna be exactly at noon. Can you believe that? Exactly at noon. So what you call this trade is also a breaker for the gap setup. Retest, right? And it's DR model. DR model, you can call mid range retest. This is a mid range right there for DR. Go ahead and retest going down. And this is a short setup for us, right? Okay, we don't see the buy side or sell side taken, do we? Yep, you see right here, the buy side was taken right there. So it did meet our requirement to enter, to engage in short. Yeah, and we do have the sell side liquidity trap. You see right here, sell side liquidity trap right there, and buy side liquidity was taken right there. Not a perfect short. Beautiful. Entry time was end this trap. Cannot believe it. We stop loss. Our stop loss just right here. Mid level. New week opening gap. Oh man, we didn't see that this morning. For some reason, we don't pay attention to new week opening gap right there. Our target gonna be buy sell liquidity, right? Buy sell liquidity on the I think 8-4 time frame. This is your sell side liquidity trap right there, and this is buy side liquidity was taken right there. Man, it's perfect setup. Can't believe it. We missed that. Also, we can say right here, DR model mid brand retest. Basically, right here, the mid brand right here. Oh, and in the mid range you have 5 gap. Then you can see that is it also retest right there. Beautiful. So right. So if we make the first trade, then we still have a second 10 trade there. They don't want it. Mid trend retest, and this is a short setup. This reward ratio, we got what, 30 cents, and we got $2.70, right? 94. Let me see, 1 to 9 reward ratio right there. Man, that's awesome right there. Normally people just stick 1 to 2 reward ratio or 2 to 1, but we have 1 to 9. You reach only 1 R, but you wanna get 10 R, I mean 9 R. Awesome. Well, that's the 2 trade that we can see. We check. Now let's look a little bit on the 4-hour time frame. On 4-hour time frame, right? This morning when it start, So on Monday, we see that it's set up like that. We thought this order block is whole, right? So we thought it's gonna go up, keep going up. However, we forgot that it have another short stop right here, right? Order block, follow gap, and a retest right there. Yeah, we completely forgot about that. Oh, this order block also huge right there. But come with this, we completely forgot. We don't see that. That's the reason why you see it's a huge down right there. We didn't recognize that. But one thing we recognize that, because this is the sell side that we were taken, and look at that. This sell side located were trap. Right, and right here it take the buy side liquidity from this, then for sure it's gonna go down. And if it go down, in this case it went down, then it surely gonna go take this, sell side liquidity. That's what we anticipate right there, and that's what exactly it happened. It take out. So where it gonna go from here? Right, it take another sell side that it will take right there. Maybe it bow back. Alright, maybe tomorrow it will bow to maybe I think it will bow around here. It may go back around the level. See right there, opportunity level, which is $3. And then what next? If it take this sell liquidity, and if it bow, it will check out this buy side liquidity. That's maybe it go back here, retracement, and then boom, go check the sell side buy side liquidity right there. That's what we anticipate right there. Let's see. That's the scenario that we are entertaining right now. What if it going down? Well, it may go and this order block. I swing low right here. It swing low right here. I swing low right here. And then maybe the north order it go down here. It retest the swing low. Bearish breaker there, and then boom, it start going down. Continue check, sell side liquidity. That's the bearish scenario right there. That's for our, 4-hour time frame. Let's see, we have 1 minute left. You see right here, the volume for today is very low, only 47 million share. Normally, the volume we see is average is 77, right? We have the one on Friday, it's 93 million. I don't know why today is very low. Just because maybe before the event tomorrow, about MC minutes, that may be the reason. And today we will call it a let's see what is today. So today it dropped 1%. Wow, that's a huge drop. Yeah, because most of that is in the pre-markets. That's the reason why. So it's gonna be a down day, I guess. It's a trend day, but it's down day, and it dropped huge. Oh man, I can see that. Let's see why it dropped so huge right there. Take a look at the daily so we can see. Yeah, daily is the huge candle right there. Yeah, you see the huge gap right there. Wow, look at that. It closed the gap. Yeah, we don't see that in the 4 hour. So this is our target right there. So go back to the trade. Okay, our target should be the D1 fair value gap low right there, which is this one. Exactly, it happened right there. Look at that. So what this one, the close 442.46 right there. No, price level. Yep. And then let's check result this. Oh, fair value gap low D1, or you can say D1 low. First, we thought we were going to use X4, but the D1 is give us much better targets, more clear targets than the X4. Alright, I think that's it for the review today. And thank you for watching, and talk to you later. Bye for now.